Good morning, traders, and welcome to BCI's morning market analysis. Let's kick off the day with a quick look at the major market drivers shaping sentiment across currencies, commodities, and metals. First up, let's have a look at the DXY. The dollar staged a minor recovery above 99.9 overnight, snapping a 3-day losing streak. Sentiment remains fragile as investors digest Trump's proposed tax cuts, which could add $3 to $5 trillion to national debt. The fiscal outlook remains a key concern, especially after a lackluster 20-year Treasury auction signaled declining demand for both domestic and foreign investors. Technically, the dollar is in a vulnerable position. It previously broke below key support at 100.22 and even pierced 99.34, its lowest level in nearly 2 weeks. Today, resistance levels to watch are 100, which is a psychological level, and 100.38, which is a 14-day SMA, with major support at 99.34. A break below could expose the year-to-date lows of 97.91. Next up, let's have a look at crude oil. Prices edged down to around 60.7 after a surprise build in US inventories. EIA data showed a 1.3 million barrel increase versus expectations of a drawdown. The broader market sell-off linked to US debt concerns also weighed on oil. On the geopolitical front, focus shifts to the upcoming nuclear talks between the US and Iran, which are reducing fears of immediate supply shocks in the Middle East. Technically, WTI faces resistance at $64, which is Wednesday's high, and 65.46, which is the 75-day SMA, while support lies at 60.54, which is the 20-day SMA, and 59.57, which is the low from May 9th. The RSI at 49.5 suggests neutral momentum. Next, let's have a look at gold, which retreated nearly 1% to around $32.75 as traders booked profits following a 3-day rally. The dollar's rebound slightly dented gold's safe haven appeal, though Moody's downgrade of the US credit rating and ballooning debt levels continue to support long-term demand. China remains a key player, with gold imports up 73% in April, reflecting a push to diversify reserves amid rising US-China tensions. Gold currently finds support at 32.89, which is a 20-day SMA, and 32.53, which is a 9-day SMA, while resistance remains at 33.60, forming a potential double top. Breaking that would open paths to $3,400. Lastly, let's have a look at the Australian dollar, which edged slightly lower below 64.40 despite overall bullish momentum. Fiscal concerns in the US continue to weigh on the greenback, while the RBA's recent dovish tone capped upside for the Australian dollar. Still, analysts at CBA have raised their forecast for the AUD to 0.7 by H2 2025. Technically, the pair remains above 64.10, which is the 9-day SMA, with RSI holding above 50, pointing to continued strength. Immediate resistance lies at 64.70 and 65.15, which is a 6-month high. Key support is at 64 cents and 63.66. Well, that's all from us today. Volatility remains high as markets navigate policy risks, geopolitical developments, and technical levels. Whether you're trading gold, oil, or the dollar, discipline and risk management are edge in this environment. So stay informed, stay strategic, and good luck on the charts today. We'll catch you in the next update.